Namaskar, namaste to everyone for the quarterly update which normally I give to all our viewers and investors. So the market, of course, today has touched an all-time high, touching about 60,000 plus. And every time there is an euphoria, when there is a hope and optimism in the market, there is a lot of money to chase equity. Then naturally the equity market does create a new wave, and that's where historically the markets have been moving. Then backed by that, fundamentals catch up. Then we'll probably see a phase where the market will go through a consolidation phase. Then as the earnings starts coming in, once again we'll see the market turning into the bull market, therefore creating a new high. If you look at the last 20 years of record in Sensex movement, each passing years or 3 years, if you look at it, we did an analysis for every 3-year period how the markets have behaved in the past. And interestingly, my own observation was every 3-year market forms a new high and also forms a base which is lower than the lower base, which is lower than the previous lower base. Which essentially means the market keeps moving up and every 3 years it forms a new high. At the same time, whenever the market falls, it does fall. There is absolutely no doubt it falls by about 20-30%. And that fall is actually creating a bottom which is higher than the earlier 3-year bottom. And that has been happening year after year. If you see the chart that's coming on the screen, definitely will see that the trend in the market is an upward trend, and market forms a new high, market does fall on the basis of earnings not coming in, or maybe other things that are affecting the market sentiment. But at the end of the day, given the fact that Indian fundamentals are remaining very, very strong, the longer term uptrend in the equity market remains. Therefore, from investors' point of view, while of course you have to keep a focus on new high, but I always believe that given the fact that last 20 years has been the way which I just explained, one has to actually create conviction for staying invested for long term, irrespective of whatever the market movements are. So clearly, SIP is the way of investing remains one of the core focus area for everyone. Increasingly, SIP way of investing has become the way of investing in mutual fund. As all of you know, in the last few years, SIP way of investing have been growing. We at ABSLAMC Mutual Fund have clearly grown the contribution coming from SIPs from customers in order to make them understand that investing for long term the SIP is very, very important. The same way, recently we have launched multi-SIPs, which in fact making people realize that most of the time you choose one scheme for SIP, but you can choose 2 schemes or 3 schemes or 4 schemes. Given the fact each scheme depending upon the mandate of each portfolio manager tend to give a differentiated return for different period of time. The small and mid cap companies, the long run does deliver return which is higher than the large cap. Your multi-cap funds in the long run delivers return which again higher than the large cap. That doesn't mean that you should chuck large cap funds at the cost of other funds. The way to construct a portfolio is you have some portion of your money invested in large cap, some portion of money invested in multi-cap fund, some portion of your money invested in small cap fund. So it serves different purpose for different period, and as in the longer term, we are able to generate reasonably good return by way of investing in multiple schemes, creating a multiple SIP portfolio. That's where you can plan for retirement, general education, for any future needs that you may have. That's something as a fund house been advocating to all our investors. One, SIP way of investing has to become the way of investing, and second, doing a multiple SIPs can help you in creating an average portfolio return for a period of time better than the broad market. So the millennials, of course, initially, first of all, they have the joy of getting the first salary, and therefore their tendency to spend money is very high, do a party is high. At the same time, they also have the tendency to speculate with that money by investing in the equity market is also generally high. But my advice would be to, given the fact that the early you start and continue your investment for a long period of time, the benefit that you can get accrued, that investments by way of sheer power of components that exist in investing in equity asset class is something is unimaginable. Therefore, my advice to all the millennials who are investing, who have just started getting into the workspace, they must start, however small it is, 1,000 rupees or 2,000 rupees, they must start an SIP for long-term investing. It's like the famous saying is there, start early, drive slowly, and reach early, and reach safely rather. The same way, if you want to look at it from investment point of view, exactly the same principle should apply. And given the fact that the longer term power of compounding is very, very powerful, that's something we cannot imagine, we can't even calculate it, but we can only experience it if you start following this route of investing for long term. I would also conclude by wishing each one of you a festival greetings. The forthcoming the festival season starting from Navratra and across the country is being celebrated, followed by Diwali. I'm sure this festival season will bring all the joy and prosperity to each one of you and your family members. I'm also sure the last 2 years of the impact that all of you would have seen for the pandemic will bring back the unity among the entire family across the country during this festival season and bring back the economy back to normal.